The cryptocurrency market is experiencing a period of volatility as investors grapple with conflicting forces, renewed anxieties about stagflation in the U.S., a scenario of high inflation couples with sluggish economic growth are putting downward pressure on prices. However, potential countervailing factors, including a liquidity injection from the U.S. government and the launch of Hong Kong's Bitcoin ETFs, are offering a glimmer of hope. Bitcoin, the leading cryptocurrency, is currently trading around $62,559, representing a 1.5% decline in the past 24 hours. Ethereum and other major digital assets are mirroring this trend, with ETH experiencing a 330% drop to $3,187. This price slump reflects growing concerns about a potential stagflationary environment in the U.S., which active procedures that have an inflation with a tempo were effective. They've been several $60 to $60 million in the Middle East, and a stagflation is historically considered a new behavior. Cryptocurrencies, often viewed as a risky asset class, tend to suffer in such situations. Recent economic data from the U.S. is fueling these anxieties. A first quarter GDP report revealed a significantly slower growth rate compared to the previous quarter, falling from 3.4% to 70%, near 1.6% annualized rate. Meanwhile, the personal consumption expenditures price index, a key inflation metric for the Federal Reserve, painted a worrying picture. Prices rose to a 3.4% annualized rate in the first 3 months of 2024, a significant jump from the 1.8% witnessed in the final quarter of 2023. This combination of sluggish economic growth and persistent inflation raises concerns that the Fed might be less inclined to cut interest rates as previously anticipated. Lower interest rates are generally seen as positive for risk assets like cryptocurrencies, as they incentivize borrowing and investment. With rate cuts seemingly off the table, investors are adopting a cautious stance. And despite the prevailing negativity, there are some potential bright spots on the horizon for the crypto market. And the U.S. government's fiscal strategy, which leverages the Treasury General Account and the reverse repurchase program, could generate over $1 trillion in liquidity into the financial system. This significant influx of cash could potentially bolster risk assets, including cryptocurrencies. It was already supported to try to build a people right now in Paul CDC. The current comes together and maybe addressed that is a crypto following them, that is a tribe to ensure that it not exists, particularly from Asia. However, restrictions on mainland Chinese investors participating in the trade could dampen the overall of the near future of the crypto market. Hinges on the interplay of these opposing forces, the threat of stagflation and the possibility of a more hawkish Federal Reserve posing significant challenges. However, potential government intervention and the launch of Hong Kong's Bitcoin ETFs could offer some much-needed support. In the coming weeks, investors will be closely monitoring economic data and government actions to gauge the direction of the U.S. economy and its potential impact on the crypto market.